How's it going, everybody? Welcome in. JT here on behalf of the EV Mavericks Discord, the EV Mavericks DAO, the ethereum daily general discussion. This is the Doots podcast. Doots podcast number 121 for this August 22nd, 2025. And boy, I am excited today because we have Leo Lanza joining the pod. Say hello, my friend.
Hey, how's everyone doing? Pleasure to be here. Thanks for having me.
Absolutely. And in full disclosure, you guys have been seeing me preach about Leo Lanza needing to get 100,000 followers on X. I just wanted to say, I say all that. We've never actually met in person. I've never really had much in the way of DMs with him. I just follow him on X, and I'm always super interested in all of his takes that he puts out there. He's got kind of a daily show, sometimes multiple times a day, I feel like, where he kind of hits the heavy, top level stuff and does a little bit of chart work. TA is not for everybody, but it's something for somebody, and everybody likes patterns. And as it sits right now at the beginning of this podcast, he has 8,959 followers, and I don't think it's going to be out of the question. If we could get some help today, we should get him over 9,000. Can we get him 100 followers over the next hour as we talk to Leo? If you want to follow Leo on Twitter, L30Lanza, at L30Lanza. Leo, welcome to the show. Like I said, awesome to have you here. I'm just going to start at the beginning. Give us a little background. Where were you before this party started for you?
Well, I've been in Ethereum for a long time. I've just been kind of in the background, not really vocal. So I recently got vocal. I think I started in like January. That's when things kind of started taking off, talking about Ethereum more. But before that, I was involved with...
You've built a hell of a following in 8 months, just like that. I mean, That's incredible. Go ahead.
Yeah, it's been going fast. It's pretty wild. But yeah, before that, I was involved in real estate. So I flipped some houses. From there, I had started a few other smaller businesses, but really I transitioned into trading full time. And so that's kind of what I've done since. And then just recently, I've started getting into the social media thing, where I'm talking about my thoughts on Twitter and YouTube and whatnot, and people seem to like it. So that's kind of where we are.
Fantastic. Leo Lanza joining us on X in two different places, on the EV Mavericks channel, as well as my personal channel at ProDJKC. We're also streaming live on YouTube. If you want to join in on the action, head on over to the EV Mavericks Discord. It's all right there at dailydoots.com/podcast. I also have up on stage here in Discord, and if they want to unmute and ask any questions at any time, it'd be great. We got some heavy hitters. We got the A word, Ether Raider, and the most beloved of them all, Hani Abu, the legendary Hani Abu. So, gentlemen, anytime you want to unmute and ask questions, just talk over me at any time, because I could tell you, if I keep talking, it's just nothing but bull posting from here on out. This is such a satisfying kind of a party going on right now. What a ride. I was speculating about 3 weeks ago, when is Ethereum going to have its first $500 daily candle? And I'm wondering, I don't know, I'm not a chart guy. Maybe Leo can answer this, but what are the odds that might happen today?
The odds are pretty good. I think that's going to be happening very soon, especially with the Fed. The Fed came out with a lot of dovish language today, so that increases the odds of us getting rate cuts, which will just increase global liquidity, which means that investors are more comfortable taking on more riskier assets like Ethereum or Bitcoin or just the crypto space in general. So in my view, we are moving into the later stages of the bull market here. So timing the market is always really hard, but I can tell you, I believe that the all-time high breaking is coming very, very soon.
And do you really think it's the late stages of a bull market? Or do you think that this time is different and Ethereum is actually going to spread its wings in a kind of develop a new kind of a, I don't know, I feel like everything else has made sense as a bull market, all of the other alts and Bitcoin, but I feel like Ethereum has this chance of really maybe setting its own kind of structure. I don't know.
I want to clarify, when I say later stages of the bull market, I don't mean like we're anywhere near a top. I just mean that we're getting into the period where we break the all-time high and we continue on from there.
Gotcha.
And I've kind of played with that idea in my head where, because we have this 4-year cycle thing that people talk about, and if you look at other assets, you really don't have that as much as what you see in crypto. So with all the pro crypto legislation that's being pushed through, where these large financial institutions finally have an opportunity to really start adopting and pushing this new technology, it makes me wonder if we don't see that trend break, and instead of us just doing the classic rip to some crazy all-time highs, if we don't reprice a little bit up, right? We go up a fair amount, and then we just, instead of having these dramatic 2-year bear markets, we just steadily staircase up, kind of like the S&P 500 does. And the reason for that is I think about it, a lot of it depends on how fast these financial institutions start to tokenize real world assets and launch stable coins. And it's just curious to me where if you suddenly have mass adoption with just trillions of assets, and every month those are going up as more assets are tokenized, more stable coins are issued, I just have a hard time seeing a scenario where you go into these prolonged bear markets again. I think that the market will always pull back. Apple has pullbacks, Nvidia has pullbacks, just S&P 500 has, all assets have pullbacks. But I almost wonder if we're going to see a trend change where it's a much more steady growth and adoption curve.
So that's kind of what I'm thinking. I've always said that crypto has a way of being sticky. And now with like all these treasuries and institutions, there's that stickiness that rides along with that, because they may get bearish, but they're not going to sell the kitty, the whole thing, and so
right. It's
going to strip away some of that volatility. To your point, the stickiness is also in the utility. And I mean, I'm an eternal ETH bull. I don't see any other utility out there. People can say all they want about Bitcoin, the limited supply nonsense, but at the end of the day, it's a massive waste of energy. It's got so many things negative about it, and nobody's using it to buy anything. They're not using it to buy a coffee like they used to say that was what it was going to be. It was always going to be this payments platform that the world was going to ride on. The only thing that's ever really come out of that is like Ethereum being the king of the stable coin. Like, there's your paradigm shift. That's going to lend, the stickiness is in the usefulness of it. Okay. So people could speculate on the value of gold without holding it, right? But it's still valuable because it has use cases. So you can understand the gold bug narrative. Well, that's perfectly applicable to Ethereum, where you can speculate on it, but it's also useful. Like, I use it every week, sometimes multiple times a week, just doing mundane things that have nothing to do with the flow of money, like minting the show or building the Poe app, or just the fun day-to-day kinds of things, and let alone stable coins, and all the I don't know. It's hard to shut up about this because I've been saying these same things for so long, and now it's kind of, I'm actually 27. Like, look at me. I've been around crypto long enough to see just like the pain of like all the volatility and stuff, and now I feel a bit of release. I think ever since we really recovered past even, honestly, like $2,500 to $3,000 as far as price goes, I just felt like, okay, now we're starting to smooth out. We're not doing this $1,400 down to $80 nonsense anymore, right?
Right.
And now it's like all this major push above 4,000. And what did we go? Did we go back to the 3,000s? Or did we revisit it for any length of time? How much longer is it going to be to where like $5,000-$6,000 is in the rearview mirror forever? And I feel like
Yeah.
That's within 2 years. I mean, there's going to be pullbacks.
Oh yeah.
You kind of
Yeah.
need them so people can get a deal. Everybody wants a deal.
Right.
So,
Right.
yeah. And the only way to get to 10K is to keep buying until, not a financial advice, but everybody talks about ETH's going to $80,000. Or are you buying at $65,000? So this is kind of
right.
I try to stay pretty grounded, like in all those types of rhetoric as well.
Yeah. And I think because up until like all these previous, this is what a lot of people don't like. They look at my targets and they kind of freak out. And what they don't realize is that up until this point, this has all just been retail trader speculation, buy on Coinbase, send a little money over there and buy type of thing. We've had some larger players buying, but we've never seen institutions like BlackRock, like, Fidelity and all these large, what's it called? I got that new term, digital asset treasuries, buying billions and billions worth of these assets. Like I think that's a big shift because we've never seen this amount of money flowing into the system.
Yeah.
And so that's why I think, there comes a point on the S curve of adoption where, you get the most amount of adoption that you can, right? Well, what would that look like? There's nobody bigger than the largest financial institutions and governments. So it looks like we're there. It looks like we're at that point where adoption accelerates because we have the regulatory green light. We have the DATs that are buying billions of these assets. And that's only going to accelerate the more that Wall Street rebuilds their current financial infrastructure on Ethereum, because they're going to want to hold that asset for security purposes and also for just fees. And so I think that we're about to see a huge demand shift in Ethereum.
That's okay. Let's talk Wall Street. We've heard this. I think you tweeted earlier, quoting Tom Lee, talking about it.
Yeah.
When? What? Like who's going to do it first? And I'm wondering how soon the dominoes fall. Is this okay? Somebody might need to explain Wall Street like I'm five. Are we talking about the entire trading system itself, or just the tokenization of individual stocks that run alongside the standard stock system?
So I think that the answer is all of it.
Okay.
I think that it'll come in stages. Like Robinhood, they are building their own layer 2 that they're going to be tokenizing assets on. The only reason that I can see that they would want their own layer 2 is if they're actually going to be processing transactions on chain. And so I think what the plan is, my speculation, just looking at what Robinhood's doing, is you build out, like, essentially think of RWAs just like an ERC20 token. They're just a coin, basically. Mm-hmm. It's a coin that represents ownership of like a Tesla stock, right? So basically take Tesla stock, turn it into an ERC20 token. It's programmable. You can, if it has dividends, you can just issue the dividends automatically to all these new smart wallets that are coming out. And so the system becomes a lot more efficient. But I believe that, and this is interesting because my speculation is that, so Robinhood is what's called a payment for order flow broker.
Okay.
They say, hey, you can trade for free. There's no fees. But what they really do is they reorder the trades so that they can extract profit. It's very similar to the MEV on blockchains, how you reorder blocks to extract a profit. Same thing happens there. My understanding is one of the reasons that they chose not to build on Solana is because Solana is very high in the amount of MEV that they extract, whereas Ethereum is very, very low. And an Ethereum layer 2 allows them to have a fully customized environment where they can reduce those MEV extraction exploits. And so, because otherwise that would eat into their profit margin, which just tells me that they are going to be doing a lot of trading with these RWAs on chain.
And those companies are going to be, racing to come to market first, and maybe even figure out the way to patent some of this stuff, and, for lack of a better way to say it, like to become the ACH or the SWIFT of Wall Street of how business gets done, and then it just spreads from there around the world. I mean, it removes so much friction from the sound of it. And then the other reason they probably chose Ethereum versus Solana is, I don't know, uptime.
Yeah, that's critical.
It's kind of like got to stay alive.
And that's a really big. People like to dismiss that as, oh, it's no big deal, but it opens the door for the possibility of, if you're a big fund and let's say that you have all your clients' money on Solana and the Solana chain goes down for 18 hours.
Jesus.
And what's the most likely scenario there is that it's down because of some sort of high traffic black swan event, right? So some disasters happened. And now all of these funds are trapped and you can't get out. And people will say, oh, well, Ethereum, a high fee. I guarantee you one of these large financial institutions, they don't care about a $10,000 fee if they're talking about billions and billions of dollars at risk.
It's every second, too.
Meanwhile,
it's every second
exactly.
that it's down. All the arbitrage bots and stuff, they can't do what they do,
Yeah. So, it's laughable that they dismiss it so easily. What's that?
Logri the Bard.
Yeah, liquidations, right? It's not just arbitrage. You get these big price events. There's all the financial speculations. There's leverage. There's options or settlement. There's liquidations that don't occur, and that makes the debt contaminate beyond just like ETH the asset, but into all the other stable coins and stuff that are used to leverage that. All those positions can't unwind correctly, right? And it creates contagious debt that then goes through like layers of insurance and failovers in the following days. Right. And how do you get that high uptime? You need multiple clients for one thing. That's a high multiple in the amount of effort invested. Go from 99% uptime to 100% uptime.
Correct. Yeah. And it creates chaos. It's one thing if you have a unfragmented system where the whole system is down and nothing is trading. That's really fine. You can survive. That's not as big of a deal as if you have a fragmented system where a bunch of funds are trapped that can't liquidate, can't get out of their positions, and it just causes chaos. So it's a fatal flaw in Solana, and why I say it's not gonna see any real traction. Yeah, especially they can't even compete with Ethereum as far as network effects. That's why I say just become an Ethereum layer 2. Why are you trying to build your entire own ecosystem when you can just become an Ethereum layer 2 and leverage the Ethereum's ecosystem and grow even faster? It's you see all these other layer 1s that are creating these specialized layer 1s for stablecoins. It's well, okay, that's great, but where's your network effect? Those stablecoins want stablecoin. What is the purpose of a stablecoin? It's to transact. Well, what does it want to transact in? It wants to transact in DeFi. It wants to buy things. And so you're creating an environment where you have no customer base, and it's just silly. And I think that it's just basically it's I've heard it's basically a grift where they're just going to try to get a L1 token premium and extract money. But as far as competing with Ethereum, it's not going to happen. It's trying to compete against YouTube as a video platform. It's just not going to happen.
Yeah, it's kind of the problem with Stripe's L1 or even to a larger degree Arc, right? No one wants to interact with Circle's USDC just on Arc, to do what? Point of sale payments? It's not that interesting, right? At the end of the day, what I'm looking for is a TradFi card that I can deposit USDC to repay the balance on, right? I want my bank to be able to directly take my USDC without having to go through an exchange at all, really. And they can go and take the Circle on the back end a couple days later and do redemption, right? But there's just no need for a chain at all. And so, if you have Arc, what practically is the difference between Arc's L1 chain as a blockchain and a server that Circle controls?
Right. Yeah.
Another company that's going to adopt that. So you think that the Chinese digital bank, central bank digital currency is going to go deploy their token on Arc? No. Right.
Right. It's ridiculous. Yeah.
Right. So as you said, Lindy is extraordinarily difficult to build, and you need something that's it's kind of like moss grows before a tree grows. Something has to take root first, right?
Right.
And then once that happens, it starts to build fertile soil for other things to build on top of that. And what is the core thing that's going to take root first, the Lycan equivalent on the ARC chain, or on Solana. Congratulations, you have meme coins. What does that make fertile soil for next? Like, what is the next advantage there? Okay, you're gonna make tokenized stocks, really? Who and why?
Yeah.
That's not
Right.
meme coin exchanges do not make fertile soil for the tokenized stocks, right? So like,
Right.
what does? Well, basically access to liquidity. Like if you look at money like an intelligent agent, what does money want? It wants to be with its friends. That's why it's constantly getting interest. That's why all the liquidity tries to go into bigger and bigger pools, right? Because if you're in the smaller pool by yourself, then arbitrage is kind of eating your LP alive, right? So money wants to be with its friends. It's a magnet on the Lindy effect. Where's most of the money? ETH.
Yep.
Ethereum. I guess that's where the money is, right?
Yep.
And so when you get the upswell, that's where the fertile soil is. Everywhere else, you're just kind of like you're fighting an uphill battle. And as you said, for what reason? Do they really hope that the premium on their L1 token is going to make up for the lack of Lindy? And the answer may be at a personal level, yes. Like the founders of the chain may personally profit more from that, but the users of the chain won't. Right?
Yeah.
Not even a little, right? So, looking at this from a legitimacy perspective, looking at this from a technical perspective, looking at this from an economics perspective, all signs point in the same way. One is up and right, and two is, at Ethereum, right?
Yep. And it's funny that you mentioned that. It's like saying that they're just trying to, basically they're being short-sighted and they're trying to make short-term profit with this L1 and an L1 token premium. But they're really making a huge mistake as far as the long game goes, because while they're off trying to build their own layer 1 chain, they could be building a layer 2 on Ethereum, building out their network effects and gaining ground. Like for example on YouTube, it's very difficult to break into, let's say, the finance niche because it is so dominated by people that are already well established. And so those influencers, I guess you would call them, they have what's called content authority, which means that they're viewed as a very reputable source for this type of information. So YouTube doesn't promote smaller channels as much. It's very hard to break through. So you're going to see a similar dynamic play out with these L1s that are trying to build their own little ecosystem, and they're going to miss out on the network effects that they could build within the Ethereum ecosystem early on and grow into something much larger. So really they're just kind of shooting themselves in the foot in a race. It's just,
I mean, don't get me wrong. I do wish we had a Solana foundation working on a Solana L2, and we could take all the business development effort and fold it into something productive for the larger whole, right? In a synergistic, rather than let's mudsling each other all day and hurt the legitimacy of our whole space and in front of the eyes of everyone, right?
Right.
Because currently they just push misinformation. They're like, look, we had 100,000 TPS chain. We're like full of no ops, and the hell is this, right? Oh, look, we're faster than Ethereum. Well, okay, but it's full of these socialization kind of like chain attestation stuff, not actual transactions. And the chain is up. Okay, but there's like 30% failed transactions. Trump launched a meme coin there, and how'd the chain do? Not really convincing that I want to launch the Texas Stock Exchange on that, right? That was not a victory in the way that they would like to believe. So
exactly.
You really have to wish that we could take all of that business development effort and put it in a concerted way and synergistically grow this legitimate and transformative technology, rather than be a barrel of crabs. They're trying to pull each other down and confuse people with like technical jargon, right? Rather than trying to make it more accessible, trying to shape a narrative, and trying to find the right product market use case that really adds values to people's lives at the end of the day.
Yeah, exactly.
Yeah,
Yep.
well said.
Couldn't have said it better myself.
Leo Lanza on the pod today. Leo Lanza, go follow him on Twitter. I'm on a personal mission to get him over 100,000 followers. This year, I just learned, he just earlier in the podcast, he's only been really up and running, getting after it since January. He's got 8,962 followers right now. At the beginning of this podcast, he was at 8,949. So he is up and to the right, just like the Ethereum price. Go give him a follow, give him a retweet. There's something about every hour, I think, on your Twitter handle. So hats off to you for being such a great bull out there. I wanted to ask you, this is kind of maybe putting you a little bit on the spot, but that's okay. I'm sure you can handle it. What were like a few, like if you can name 5, but even if you could just name like a couple of like the most big time headlines of 2025 in your eyes? I think we can agree that 2025 is definitely a bookmark year compared to everything before it in terms of regulatory stuff. But what else is like, what do you think? What is like 2 or 3 of the biggest headlines that are just irrefutably, undeniably bullish?
Well, I would say first would be stablecoins and the Treasury Secretary talking about how they want to increase U.S. dollar dominance abroad, meaning having people in like Africa trading
dollarize the world
USDC stablecoins. Yeah, that you have the Clarity Act, which is going to give rules of the road for these institutions that are looking to build on Ethereum. Mm-hmm. The treasuries, obviously, the digital asset treasuries that these companies are starting to form. It's showing a real trend where these companies are seeing ETH as the foundational security layer that the entire global financial system is going to be rebuilt on. And it's kind of just a light bulb moment for them. Oh, wait, we should own the rails of the future of finance. The other one, I think, would be that this is the first time we've ever seen a pro-crypto government, a U.S. government that is actively promoting and pushing the adoption of this new industry. So,
and grifting on it.
Yes, yeah, that does happen too.
But I'm with you.
But
yeah, I feel the same sentiment about the government stance. It was pointed at, the reason why I say that is because I had made a point, like, we've never seen an administration that has been this bullish on crypto. And then the person was like, yeah, but also grifting on it too. It's like, that's fair. It is a little bit idiocracy with all of that stuff. But that being said, there's certain, let me put it this way. All the things that are, even if they're executive orders or a little bit partisan right now, it will be wildly unpopular to try to undo all that stuff in a midterm or a new presidency with the Democrats in power. At least, from a U.S.-centric point of view, I think it would be political suicide now to try to put the genie back in the bottle, as they say. So, yeah, that's well put.
And that's also part of my thesis, is that I think these financial institutions realize that, and they're just going to push adoption.
Yeah.
Because if you can get the American people essentially, I don't want to say dependent because that might be the wrong word, but I guess mass adopted to Ethereum, then you can't just say, we're going to get rid of the internet. It's not going to happen.
Yeah, I've heard the words Overton window. Overton window is words I've heard before.
Average American on it. I do think that the institutions are going to, you're going to have U.S. bank deposits on Ethereum in a decade, right? Whether the users know they're using Ethereum or not, their funds are going to be earning yield in DeFi as opposed to mortgages or something, or maybe even mortgages in DeFi. But I think that we still have UX issues. We still have wallet issues. We still have the people. You can't expect everyone to have sovereign control of their wealth because they're not responsible enough, right?
Right.
So I do think that you can't get away from certain things like password recovery and administrative control on certain things. I also think the states are going to be. They may put the ledger on Ethereum, but they'll still have the admin keys to change it according to court order. on certain things, like if you actually put the property record on chain, right?
Right.
And so, it's going to be kind of a spectrum of decentralization, but you can
Yeah.
always build a centralized system on top of a decentralized base. You can't do the reverse, right?
Right. Yeah.
And so we're going to essentially bring many of the value of the blockchain, things like atomic transactions, a ledger where the rules of the asset or the rights of the asset can be enforced internally rather than externally through a court system. Certain things like credible neutrality, right? We can bring these benefits, 24/7 uptime,
Yeah.
we can bring these benefits to a lot of assets that currently don't have them, and help a lot of people through that. I was just writing a post just yesterday on people currently have to hold like maybe a month of salary just on their checking account, just because otherwise when you go to repay the card you might need 3 to 5 days of settlement time because they can do that, and then you have to go repay the card, or you miss a payment, then there's a late fee, or you hit with an overdraft or something. So we have this like float, right, in our accounts that we have to maintain, where we're earning 0% APR and just getting ripped off because of the bank's inefficiencies. And that
Right.
is
Yeah.
annoying. And every time you want to change from one form of value to another, there's usually a multi-day delay. And so it's not as though I can just hold everything in interest-bearing position, then spend it in my TradFi account in the same way I can for ETH, right? I can atomically unwind an interest-bearing position to USDC, transmit it to someone, and then on their side, they can atomically rewind it into whatever they want to hold. And so it kind of frees up all that capital that is basically just people are being exploited by banks on, right, to now be put into a productive state of the user's choice and have some pure economic freedom there to really express your thesis with all of your holdings, right? I think that's a beautiful thing.
Yeah, absolutely. And that is what you're describing there is what these network effects allow. I look back to like, if you look at like the East India Trading Company, however many, I don't know what year they started, but you go all the way back a few hundred years. The reason that they grew to so much power and so much wealth was the network effects that the shipping routes that they controlled allowed. They unlocked trade around the entire world. And that's effectively what we are doing with Ethereum, but in a digital way. And, you can unlock this capital to where it can actually be used. And I think that, like you said, it's a beautiful thing, and I think that it'll grow the global GDP more than the internet has.
Do you know what the inflation-adjusted market cap of the India Trading Company would be?
I do not.
Let me ask Grok that. Let's see what pops up.
I'm curious because it would be huge.
I think it's gonna be bigger than 1 trillion. Yeah.
Yeah.
Let me look that
up. Let's ask AI.
Gosh, it's a big number.
I bet it's massive. Yeah, I bet it's massive. Well, the British people figured out spices after that. I mean, God, they were missing out for a millennium.
Yeah, and tea. They like their tea.
Yeah, it's like. Yeah, there's more to life than
more of a coffee guy myself.
Meat and bad teeth,
All right, one hit I got. The Dutch East India Company was worth 7.4 trillion in the 17th century.
Jesus.
I'm getting other hits on this. It's between 7 and 10.2 trillion. So you want to say like that's what the market cap of controlling trade and empowering trade is worth, around 7 something trillion. Do you want me to divide that by 120 million and give you a number? Or is that too bullish?
I kind of like that. I like that. That's a good way to look at it.
Yeah.
I would go as far to say, though, that because back then the economy wasn't nearly as big as it is today. So if you scale that up, it would imply that Ethereum's worth even more than the 10 trillion market cap of the East India Trading Company.
That's funny.
That's a good way to look at it, for sure.
Who's that? Is that Etherator? Were you talking?
Yeah. Hey, Leo. Thanks for.
Hey, how are you? Nice to meet you.
Yeah. Same, likewise. And sorry to interject, but
no, go for it.
I had a question for you. So obviously, you're a growing voice in the space, and people are increasingly, looking to you, kind of seeing your takes and everything. But What do you think, from your standpoint, the community leadership voices, the bigger names in the space, I guess, in Ethereum, what do you think they're doing a good job of highlighting, and what do you think they're lacking in? If you have a perspective.
I don't know. I hadn't put.
Leo's been concentrating on his own thing so much.
I hadn't put much thought into that. I know that it's taken a much better shift in the direction that I wanted to see. I think one of the big things that bothered me within the Ethereum community that it lacked was hype and excitement and passion to be a part of Ethereum. It seemed, and this is back in January, and that was one of the things that I kind of wanted to, I guess, try to help whenever I started talking. And it seems like that's come back a lot. I'm starting to see more and more people. Like I did a post a while back about, Ethereans, everybody rise up and fight back and whatnot. And I think the community has done a phenomenal job of all of us just coming together and correcting the FUD, getting people excited. We are rebuilding the internet. We're rebuilding all the financial markets on Ethereum. And if you look at visionary companies like SpaceX, for example, they have this one unifying mission that everybody involved is working towards, and that's to get to Mars. It's this really grandiose thing, and that was something I wanted to see championed more in Ethereum. Of let's bring the entire world on to Ethereum. Let's upgrade the entire financial system. Let's upgrade the internet, all of it on Ethereum. And I'm starting to see that again. I'm starting to see people get excited as to what Ethereum is going to become, and that's a really big deal because. If you get people excited about something, it's not just about motivating people with money and throwing money at them. People get a lot of value in life working on something that is going to have a huge impact on the world. And I think that's also how you attract the best talent and the smartest people.
I'm going to add to that. Go ahead, Etherator.
No, you're good. Go ahead.
I was going to add to this, Leo. So this really spurred me on. I feel like at some point there was so many people resting on their laurels from early financial gains that people got kind of complacent about it. There was also this other ethos with a lot of Ethereum developers is that you just don't want to show any pride. It's all work, and it's like I feel like Ethereum was kind of losing its way because we weren't being loud enough about the pride points. Let's just focus on the fact that we went from proof of work to proof of stake, which was swapping engines out on the Autobahn at full speed. Okay.
Yeah.
And it went without a hitch, and every subsequent upgrade has gone pretty much flawless. And everybody's just, those core developers that make that magic happen need to be shouted from the rooftops. Good job. Have a little pride in your industry. The people need to support them, and they were starting to listen to the rest because there's a lot of people even within that core group. There needed to be a little bit of a shakeup. I think the switching out of the heads of the Ethereum Foundation was a good move. And then the beginnings of Etherealize was a catalyst. So, Leo, your journey started in January. Something in you welled up is I'm done sitting on the sidelines. I have something to offer. I'm going to go take the bull by the horns and get after it. I will say from our community, and I know you're not on Reddit, but you really should be, we had a community called ETH Trader. ETH Trader became ETH Finance. ETH Finance, around that time, I think it was back in October of last year, if I'm not mistaken, ETH Finance has this killer daily general discussion. Generally, hundreds of comments. People that have bled through the bears. We've become friends. We've met up in real life, many of us. You see the maverick PFPs that are out there on X, of which there's just over 1,300 of them, right? But I bet, Leo, in your travels on X, when you see those EV mavericks crawling around, they're generally pretty well aligned with what you believe in. Well, that was all born out of ETH Finance. Then at some point, I got contacted to help bring over the moderator team from ETH Finance to the core R Ethereum subreddit. There was no daily general discussion. There was no price discussion. So, Leo, it was like just total technical stuff all the time, but it had 3 million subs. And so,
Wow.
but it was quiet. It was eerily quiet. And it became time to like, okay, the ETH Finance EV Mavericks, we've got some pride. We're not afraid to talk about the good things and the bad things and be honest about macro stuff. And like, we get it. So we became the daily general discussion over on our Ethereum. And so that allows price discussion. And I think that's the other thing out of this whole thing, where sometimes the people who are technically aligned only focus on the tech. But you do have that investor side in this whole scheme, because without the investor side, you don't pay people on this side, right? So it's a self-feeding machine. And I feel like now that we got this harmonization and this synchronicity, this kind of this rhythm is happening. Finally. And it's being catalyzed by the U.S. government, and it's being catalyzed by these treasuries. I mean, at some point, the brakes are going to come off. We're just flying, dude. You know, the training wheels are off. We're out in the wild now. And so is it time to be braggadocious and all that? No, not necessarily. But damn it, it's okay to celebrate once in a while and have some fun. And give these devs their just due, because they really have done such an amazing job. All the layer 2s that are out there, I mean, it's incredible. It's just incredible. Leo, I want to be respectful of your time. Any thoughts that you have before we move on to the second part of the show? Anything you want to get out there? And can you stick along for a little bit of this next piece? Because I think you might like part of it.
I would say that to the developers out there, just to get really excited. You guys don't get enough credit, and you're building something that people that aren't even born yet are going to use, and it's going to grow into something that we can't even really conceptualize how big it's going to be. Like, I have trouble thinking about it, and every other day it seems like I have an epiphany as to a new use case for Ethereum, like intellectual property rights being tokenized and whatnot. Or even like if we end up in a situation where we do have people living on other planets, you could have a layer 2 that functions on another planet, and then all those transactions eventually get posted, because there's like a latency. If like you're sending data to Mars, for example,
it's one big roll up.
Just get exciting. Or just get excited and passionate about it. This is a monumental achievement.
Yeah.
Yes.
Go ahead.
I was going to say, just to piggyback off that real quick.
Sure.
Leo, I think one thing that has always stuck out to me that I feel like we really don't take advantage of is the devs have an incredible amount of power to forge this, to have a say about this new system in a way that, in society, the average person really has not had, So we really can imbue so many of these values early on. And honestly, that's one of the things that like bothers me the most about this very short term thinking that we see like in Solana and stuff. It's because we really have the opportunity to imbue like censorship resistance, neutrality, all this stuff at the base layer to benefit everybody, So like, build casinos later for sure. Build 1,000 casinos. Who cares, right? But we need to have like the best initial bottom layer as possible, so we can build sound infrastructure on top of it. And yeah, I think, like you said, getting excited about that, having people dream big. The bigger we dream, the better devs we're going to attract, because devs want to tackle the hardest problems there is. And people want to strive for, a better future is always willing. Like, you're always willing to bet more on a better future, And I think we see that with Ethereum. So. Yeah, I appreciate everything. I definitely.
This is one of the few technologies in the world that truly can make it a better, like unambiguously a better place.
Mm-hmm.
right? Reducing trust in the capacity for exploitation, reducing like systemically reducing the capacity for corruption. These things are fundamental goods. I have a hard time finding many other technologies that's true for, right? Like sure, solar energy or something, but like AI has the potential to massively increase wealth inequality and create unemployment and all kinds of potentially negative adverse effects, right? You increase industrialization and then like suddenly we destroy the oceans or something. Like it's hard to find many technologies that are just as purely a positive thing for humanity as blockchains, right? This is a human coordination or just a coordination technology. It's our ability to come to consensus in a fundamentally new way. And that is a species transformative thing. It may be part of a necessary, if not a complete condition for solving some of the larger challenges that we have, like extinction level events that we see on the horizon. So like this is dream bigger.
Yeah, dream bigger. There's no shame in having a wild imagination. You know, if you can conceptualize it in your mind, you can bring it into reality. It just takes time and it takes engineering efforts. You know, I mean, humans have gone to the moon and gone into space, and
allegedly.
Allegedly, yeah.
I'm just kidding.
Went down a different path there. But I guess my point is like, you know, whatever we put our minds to, we can build. And, you know, Ethereum is about building a better future for all of humanity.
Gotta love it. And I'd be remiss if I didn't mention it. Etherator that's sitting on Discord that you were just talking to. He's actually the original concept designer for the NFT for the EV Mavericks all those years ago. So I'm so glad.
Oh, wow. Very cool.
Yeah. I'm so glad that you're able to stop in, Etherator.
You should come join us in that.
Yeah, you should come and join us. What's the floor at? Where are we at on those? Are they 0.3 somewhere in there?
Oh, it's tiny.
It's tiny. Yeah. Grab one. Leo Lanza, let's see. We got to do a check on his follower count. He is at 8,970 followers right now. We're trying to get him over the 9,000 mark. Let's see if we can get it done by the end of the show. Leo, do you want to stick around for a little bit? I'll read Reddit so you don't have to. Give you a chance to do a little color commentation. All right, very good. We're going to move on then. And any other parting questions from anybody out there? Now's your chance. Otherwise, we can also pick it up later in the show. Thanks for joining us here on Discord. We got quite a crew out there. K Brot, Canada with the K Yield Daddy, and a whole host of other Mavericks and beyond joining us on Discord. We're also streaming live on 2 channels on X at EV Mavericks, as well as at Pro DJ KC, as well as Twitch and YouTube. And maybe my mom's even watching me on LinkedIn. Who knows? All right. Very good. Well, we're going to switch gears over here, and we're going to jump over to this week's Daily Doots. The weekly Doots live stream is all about showcasing the best of the week from the daily general discussion on our Ethereum. It's a read-along reaction series. And if you want to follow along, head on over to dailydoots.com, designed and produced by our very own Hani Abu. Big thanks to Tricky Troll for capturing and curating each day's Doots, and the A Word for curating this beloved weekly list. Subscribe to us wherever you get your podcast. Just search ETH Finance, EV Mavericks. If you want to support this channel, you can mint all of our episodes at pods.media/EV Mavericks, or just buy us a coffee at dailydoots.eth. As always, if you know somebody that wants in on a piece of this action, send them my way. Well, let's head on over to our rich list here, rounding out the rich list. Let me refresh page. Aiden Cairo at 118, Ethical Trade at 118, JS Tears at 123, Crypto Out Currency at 124, Hani Abu at 134, Tricky Troll at 162, Benito 2030 at 175, Superfizz at 228, Logri the Bard climbing up 231. He had a couple of double doot days last week, and Harog had a double doot day, at least one last 2 weeks, I should say, at top of the leaderboard at 251. We have a total of 1,242 dooters, and this is updated weekly for each and every show. All right, so Leo, you're like, what is a doot? A doot is basically a point given to somebody who makes the top 10 list of our daily general discussion. So daily general discussion happens. Tricky Troll goes through. He assigns 8 or 10 of them. I go in and give him a point. He posts them to the next day's daily, so everybody could go back to the previous daily to figure out what was hot from the previous chat. It's really cool. And then we do these weekly roundups. So everybody that you see on this list has earned at least 1 point. That's 1,242 curated by yours truly, along with Tricky Troll and the A word. For those of you who didn't know, I was locked up in the hospital. They had to take out a very nasty gallbladder, but I'm back and I feel great. And God love modern medicine, because I don't know what I would have done with that laparoscopic procedure. I was dead on the table. I swear to God, it would have taken just a few hours. I was already going septic. That's all I'm going to say. I won't get into any more than that. Yeah, it was bad. It was really, really bad. So I'm very thankful to be here. And I've had 2 major stomach surgeries before. So being under the knife is nothing new to me. It's just like the parts just keep dropping off, you know. It's, at some point, the ones that matter need to stay on, you know. All right. I have a good overall attitude about it. All right.
That's good.
Yeah. What are you going to do? You got it. You know, you got one life. Make it happen best you can. Looking at our overview, upcoming events, looks like Nigeria, August 28th, ETH Accra, Ghana, August 29th, Warsaw, Istanbul. I mean, look at all these. It's just crazy. Token 2049 in Singapore, October 1st, and then Boston Blockchain Week, September 8th. It goes on from there. ETH Istanbul. I mean, it's awesome. I just got invited by a friend of Paul Brody's to go speak at a place called Princeton. Can you believe that? And you know what the topic is, Leo? I mean, a lot of the Mavericks will get this reference more than anything. But the topic, apparently, they're doing like a cultural study at Princeton. And Paul Brody suggested me, of all people, to go because it's called, what is it called? Religion, the Occult, and Crypto.
Wow, that's...
I said, of course I'll go. Well, a bunch of us Mavericks took a trip to Hawaii together. And we all got matching shirts, so it must be kind of an occult of some kind. But that's a true story, and I'll let everybody know more about that as time goes. That's supposed to be like November 5th. So if you're in the Princeton area around that time, I'll be there. I don't know. They can find me a smoker. I'll throw down too. I'll put some barbecue together for people out on the East Coast. Show them what's up. All right, here we go. Moving on. The morning roundup. Frank the Tank chimes in. Ethereum. Gumpa Bucky says 4283 and headed for greatness. Well, that was prophetic, huh? What is the price right now anyway? 47.79. Is that updated? 47.83. Look at that. On the dot. $500 move on the dot from earlier today. And Alexis Keff chimes in, 0.038 on the ratio. Did we ever get it? Leo, tell me if we break that 0.04 on the ratio. Have we done that yet? Are you looking? Let me know.
We did it earlier today.
Pretty sure we did, yeah.
Oh, that's fun. That's always fun. All right, weekly haiku courtesy of JS Tears. Come back to your roots. We grow strong from our disputes, embracing our doots. JS Tears writing a haiku every damn day until we break that all-time high on the ratio. How does he do it? How does he do it? And of course, Clam Chota says it's Chota time. Our ship post of the week, because we always like to save the best for first, goes out from Tricky Troll. Tricky Troll writes, I hereby announce my intention for my company to buy 5% of the ETH supply. Now give me money so I can buy all this ETH. Whoa, it actually worked. Nice job, Tricky. Nice job. All right, user PA7X1 highlights some alternative stablecoins to use to divest from Circle, who want to utilize their own L1. This is PA7X1. Oh, yeah, definitely climbing up. PA7X1 is a Deuter number 99 for the week, about to break the century mark. PA7X1, if you have USD or any other Circle minted stablecoins, it's a very good moment to consider switching to an alternative that does not intend to migrate to a centralized database with a bit blockchain buzzword hand waving. Here's some options. Bold, BOLD, Liquidity, and Pure DeFi. MUSD, rumored future stablecoin by consensus. PiUSD by PayPal, and your EURE-USDE, which is Monerium. This matters way more than you think. The sooner we vote with our dollars, the better. Hani Abu says, cannot highlight that last line enough. Well said, Hani. They will try to vampire attack USDC and liquidity on Ethereum and migrate it to their chain. Yeah, from the mountaintops. If you're like me and you are worried about Walmart coming into your town and destroying all the small businesses that kind of decentralize products and goods around the town, stop shopping there. Right? Vote with your dollars. Same goes for USDC with Circle, okay? So if they really do go down this hole of a centralized blockchain solution to stable coins, and you keep using it, you're part of the problem. All right?
It's real hard to get no exposure to USDC while getting any type of yield, really.
Sure.
Like you want to say you want to use Frax, what's it backed by? USDC. Like where's the yield, right?
Mm-hmm.
It's what is all the liquidity paired against? If you want to do an LP, it's including like what, USDC as some part of it, maybe DAI, certainly USDT in some places, right? But I wouldn't run from USDC to USDT, right? So it's a bit challenging. We really need some one of those decentralized stable coins, which DAI decided not to be. We need one of them to pick up and really take center stage here. There is a right market for it. I just don't know who's going to take that up.
Leo, any ideas?
Yeah, I don't have anything on that. I haven't really paid much attention to decentralized stablecoins, although it would be good to have one. I'm not exactly sure how that would work with the Genius Act. I guess it wouldn't need to be if it's decentralized, it wouldn't need to be in the US. I guess that makes sense.
Correct.
Yeah.
Well, we got, according to this list, PiUSD by PayPal is decentralized. So to your point,
kind of. PiUSD is centralized, but rather than being in the general, like let's say PayPal goes bankrupt,
okay,
rather than being in the general line of creditors, the PiUSD is a bearer instrument for the trust that the underlying is held in. So you are guaranteed the dollar in a legal way that you're not guaranteed for USDC or USDT.
Gotcha.
It's because you're actually redeeming against a trust, and you have a partial ownership of the trust when you hold the PiUSD token. Just a minor distinction, but is it still centralized? Yeah, absolutely.
Okay.
Yeah, it's
I'm wondering if any of these treasuries or institutions, some of these big banks, are going to come to the beck and call of decentralization. And
well, JP Morgan Chase is definitely making a stable coin, but I don't think their aim is decentralization. So when you say decentralization, that's kind of like they want the profits from a bunch of people giving them dollars. Now the Genius Act has said, look, you can't give interest out on this. You've said, oh no, we forced us to keep all the interest on the money that people have given us for the stable coins. Shucks, right? So they want all that revenue, basically Tether and Circle as a revenue source. They want that for themselves. So they're competing for.
Uh-oh. Did you cut out? I think, Logri, did you cut out? Or is it me? Leo, can you hear me okay? Okay, I can't hear. Chickadee check 1 2. All right, maybe it's me. Maybe I need a restart.
There we go.
There you are. Okay, I can hear you. Logri, are you okay?
Yeah, I'm good.
Okay.
I was just saying that the goal of any of these banks is not decentralization. It's not in their stated values.
Gotcha.
They're profit seeking.
Gotcha.
They're fighting for Lindy, and they're gonna do that with in every dirty trick they have available. The decentralized stablecoins are trying to do something that is more resilient to any type of fuckery, right?
Technical term.
We're optimizing for resilience, not for profit seeking. And Leo, you clearly want to say something. I'll let you go.
Oh, I haven't really put much thought into the decentralized stablecoins, but now that I'm thinking about it, I guess the way that would work is like you have these tokenized like treasury bills that can be traded on chain, and I guess would it work in a sense of they go into a sort of decentralized smart contract of some kind to.
You don't even need the treasury bills, because the treasury bills have to belong to a legal entity, and on-chain addresses don't have legal standing. So usually the way you do decentralized stablecoins is you mint them into existence. This is your DAI, it's your Curve USD and ALUSD and a bunch of others, right? MIM, for example, they function on this. We're gonna get some collateral, and we're gonna allow people to mint it, and we're gonna manipulate. We're gonna hold it steady in 3 different ways. One, we're going to hold a collection of reserve stablecoins, so like USDC, USDT, whatever. Let's say we back it because we hold 20% of that. So if it tries to depeg, we just swap it, and until we run out of tokens. Past that, they start doing rate manipulation. So they say, well, it's under peg. I need to create demand. So what am I going to do? I'm going to increase the interest rate to encourage borrowers to repay it, and they'll buy it back, and there's the demand, right? And the third thing they do is they back it with revenue. So you say something like Curve USD. You say, we've got the Curve exchange. It's making like 500,000 a week. So we're going to take that, and we're going to turn our burner system and point it at Curve USD. So it buys back Curve USD every week, and we pay out in that. And the time between when people have claimed it and sold it, or if they want to hold it or whatever, right, it creates this short-term demand on Curve USD. And so we got basically 3 different peg mechanisms. The other entirely different category of decentralized stablecoin is a delta neutral stablecoin, where you're basically acting on a rate spread. So you'd say like, well, I'm going to take my my LST, say that thing's decentralized, and now I'm going to short it, right? I'm going to use that as collateral to short ETH. And the short pays money. The funding rates are generally positive, is what that means, right? And the staking makes money. And so between the 2 yield sources together, I'm usually making something like 5% APR, which is more than the staking rate, by the way, right? And when I do the long and the short together, what's it create? It creates something, if it goes up or down, it doesn't vary. So it's stable. And so you can give it, if you short it on a USD market, then whatever the denominator is in that short, that becomes a unit of account of the underlying position. This is how something like Athena works, right? But you could build a more decentralized position. But it's basically a long and a short, both of which are making profit on those positions, and you get the combined yield of them. So you're basically, rather than having the treasury and the Fed set the rates, you're letting the Ethereum blockchain and the demand for borrowing set the rates that you get for this new stablecoin.
Interesting. It's fascinating. That definitely would have a place in the market.
On my blog, so.
That's Logri the Bard from tokenomicsexplained.com. Put that bookmark in your pipe and smoke it. That's
interesting. Very interesting.
Yeah, he's very well versed in all this stuff. He's our technical interviewer on the show, and I always love having his input on stuff like this.
I did write a couple pages on the ETHisDigitalOil report.
And I see you're on the Doots this week too.
Yeah.
Your name's on it.
There we go. All right, moving on down the list. User Epic Trader issues a call to action for the Ethereum community on Reddit to help out in threads outside of the daily. Just want to encourage people to visit other threads on the main sub and comment going forward. There seems to be an increasing number of posts from people who are new to Ethereum, and the quality of lots of the replies is garbage. Like so much misinformation and lack of basic understanding. I can assure you as a moderator, Epic Trader is 100% correct. And he is a Deuter 18 for this week. Get on the front page of our Ethereum and be the change that you want to see and be a good leader. As a moderator, we've also removed a lot of those shorter newbie questions because we want them to come into the daily discussion where the eyes of the Mavericks are more and plentiful than what the moderators can provide. We are such a good culture. If you have good questions about Ethereum and you want to learn more, come to our Ethereum. And so, yeah, appreciate that, and make sure you get outside the daily and check those threads as well. Don't forget to hit the report button. We will come along like the good custodians we are and pick up all the empty bottles and crack pipes. Thank you. All right, user Whispered State is following the degradation of Monero in light of the proof-of-work attack and its implications for Bitcoin. Whispered State is a Deuter number one. A Deuter number one getting on the daily show is a big deal around here. Congrats. All right, Whispered State. Here we go. Kraken is now suspending Monero deposits and withdrawals. Pretty crazy to see real-world attacks on proof-of-work. Oh, weren't we all told? We've all known here that it's always been inevitable, but this just shows the security degrades if it's not profitable to mine. A lot of people think Bitcoin is immune to this, but on the contrary, every 4 years, this becomes more and more inevitable for Bitcoin too. It's very, very bearish for proof of work. I couldn't agree more.
You mean Bitcoin miners are mercenary and they don't really care about the chain's consensus at heart? Shocker.
Yep, I agree, man. Shock.
The interesting thing about that attack wasn't that it cost a lot of money. It was really a slight tweak in the incentives of the miners through the pool was what enabled them to do this. They were able to offer slightly higher rates than the competitive pools. And so a bunch of independent miners around the world pointed at their pool because they got an extra like 0.4% or something. And once they had the 51%, then you can do a 51% attack, basically time bandit that and steal a bunch of money and short the fuck out of Monero and profit on the TradFi side if you want.
So what was the isn't there a big Bitcoin mining company that just bought a bunch of ETH? Is that correct? Am I correct on that?
There is a previous Bitcoin mining company that bought a bunch of ETH. It's the BMNR, right? It's
Bitminer. Yeah. And why is
so
that?
They've got around 1.5 million ETH. Oh, he talks about it, right? He said, look, this is the future of finance. He said, look, we've got some that's digital gold over here, but rebuilding the entire financial system is going to be worth more than just a digital gold narrative. So, and look at the price spread. Like at the time he started buying, it was like 8 or 9 times the price of ETH. So he said, look, I've got a 10x more upside potential. And just on it being the total addressable market cap of this being larger, and I've got like another 10x to catch up. This is like a 100x play. This is the next get into this early. This is like getting into Bitcoin at $1. That's kind of his argument, right?
Yeah.
And at the time where he did that, that was a very contrarian play. Like we just launched the ETHisDigitalOil report, right? Like anyone that had in the last year before that decided to be bullish on ETH was just ridiculed and lost followers. And so we had all been kind of like hammered into our holes by some combination of regulatory oppression. If you're Joe Lubin and you tried to speak up, the SEC came knocking on your door. If you're me and you tried to speak up, they just laughed you out of the room, right? Mm-hmm. So we've all kind of been suppressed on our bullish instincts and trained to be like, well, we need to evaluate based on revenue. We need to evaluate based on our inflation numbers or something. Like it's a tech stock, but that's not that. If you look at the valuation of ETH purely based on the revenue flow of the gas fees, it's worth like $200, right? Like it's literally not worth enough to secure the financial system, right? So in order to turn that around, you had to find a buyer. You had to find someone that was going to say, fuck y'all, I'm going to go and get my 1.5 million ETH myself and turn this around. And we found that between like 5 treasury companies, right? Mm-hmm. Yeah, a bit around 1.5 million, I want to say, and SBET's around like 750,000. And then there's kind of a long tail. I want to say ETHM is going to be around 250,000, but it's all under Keyzone stash right now. I don't believe they started buying yet.
Leo, anything you want to add to that?
Yeah, just that, and this was something that I stressed a lot when we were writing the ETHisDigitalOil report, that, ETH is a commodity, and commodities are not valued on revenue. And so that whole thing was just completely ridiculous. Commodities are valued based on supply and demand. And so like wheat, for example, wheat is a different type of commodity, whereas ETH is a inelastic supply commodity, meaning that as demand goes up, you can't just dramatically increase the supply like you can of wheat, for example. We can just plant more wheat and it will grow.
Even gold goes up in price and more gold mining firms show up when they start pulling more out of the ground.
That too. Yeah, that too. And so it's even more inelastic than gold in that regard, that you can't make more. In fact, it's the opposite. You burn the supply and you can't get more unless you stop using it, which allows for more to be minted, but we're not going to stop using it. We're just beginning to onboard the entire world. And so that whole narrative was just talk about a fumble. That's just basic economics, that you don't value commodities on revenue. And it's not even that. It's funny because like I run a validator, for example. I'm effectively independent business that's earning money by providing a service to this decentralized network. So you wouldn't value you wouldn't value Apple based on the revenue generated from the people over in China or wherever it is that the iPhone is made. So it's a silly argument to make from the get-go.
Right on.
Well, it's one that the whole ecosystem kind of rallied with the triple halvening, ultrasound money. We're gonna it's gonna be the deflationary assets, and we should get it to 3% deflation, and that's how we're gonna make an argument that should be worth something. That was something people very seriously were promoting around the time of the merge, and this is Justin Drake. It's not small people either.
Right.
So I agree with the deflationary aspect of it, but I don't you can't. The burn mechanism is a function of this. For example, if I've got 10 Babe Ruth autographed baseball cards in existence and I burn 5 of them, well, that's not revenue that's been created. That's asset destruction and increased scarcity, meaning that the other ones are more scarce and now worth more. But it's not you wouldn't take the value of the 5 and then apply a multiplier to it and say, well, now this is what the rest of them are worth. No, it's what somebody's willing to pay for it because of supply and demand dynamics. And as we begin to, and this is why I say the market cap of ETH is tied to the amount of tokenized assets on it, because as it becomes global financial infrastructure, we're going to value that. People are, as we're already seeing, these treasury companies, these DATs are buying it and they're hoarding it because it's going to be used to secure the entire global financial system.
There's two ways you increase the demand for it, right? One is you make it more scarce, but the other is just you increase the number of people using it. You just grow the pie, right?
Right.
The user base. Yep. And if you look at the number of people using ETH right now compared to where it's going, it's 1/100th, right? It's
nothing.
I do not think that we have 6 billion people using the Ethereum chain, right? I think we have 8-10 million in unique wallets a day or something. So there's almost 1,000x there. We could increase that in theory, right? And holy crap. And just the security load. It's not as though you can put a quadrillion dollars of derivatives on a chain that's valued at 300 or 400 billion. The security load, the benefit to attack is too high relative to the cost to attack, right?
Right.
Security load condition. So there's two answers to that. The bears would say, oh, well, that's why they're never going to put a quadrillion dollars on the Ethereum chain, right? And the bulls are no, but look at all the benefits of the blockchain. That's why they're going to want to put it on the Ethereum chain. And as they do so, they're going to need to have ETH either for gas or for insurance of transaction inclusion type of deals, right? Censorship resistant type things. If you get one out of whatever blocks, you can be sure that you'll be included because you're in the validator set, technical reasons or financial reasons, right?
Right.
But I've seen many arguments that say, yeah, but that's not guaranteed to go up. And it's it's kind of hard to guarantee that it's going to go up, right? You in any supply and demand type of thing, right? It just I remember earlier this year, we were falling from 4,000 to 1,500, and I was looking at good news every day. Every Robinhood says they're going to make tokenized stocks. Coinbase is going over this. We got an IPO come for Circle. The government's doing a Genius bill, and I'm just watching the price go down and down and down. And I'm you guys are pricing in some weirdly negative, expectations for what is the most, the biggest magnitude news we've had in 10 years.
It was so weird.
I'm just looking at this kind of disbelief, going well, I guess I'm buying more.
Yeah, people are sell the news. It's that's actually kind of not the news to sell, but go for it.
Yeah. Okay.
Right.
Good for you. Awesome. All right. User trillions dollars tech shares a bullish take from JP Morgan. JP Morgan analysts, quote, "We think Ether or ETH is emerging as a direct way to gain exposure to the expected meteoric growth in stablecoins, as the Ethereum network hosts most of these stablecoin assets." This is according to the Wolf of Wall Street's at Scott Melker. It might as well have been Leo Lanza, who now is sitting at 8,972 followers. So I remember Jamie Dimon from JP Morgan's putting his foot in his mouth several years ago, kind of grunting on crypto assets. Meanwhile, JP Morgan was already working on crypto in-house. So yeah, good.
Yep.
Fine. We knew this was coming. I've been talking about it. Trillions dollars tech is a Deuter number 10 for this week. So congrats on making it to the weekly. User Gumba Hasselhoff shares their leanings on fiat money and highlights just how cheap and efficient ETH's scarcity is. Gumba Hasselhoff is a Deuter number 6. So I recently read a nice book by a German game theorist and economist, Christian Reich, called, I don't know, I'm not going to try, Fürstengeld, Fiat Geld and Bitcoin. It means Duke money, fiat money, and Bitcoin. Yes, it's written in German and no official translation exists. I know Reich from his YouTube and social media as a rational guy, and like some of his crypto takes I had heard so far, especially as he, coming from traditional finance, is not particularly caught up in the existing narratives of the crypto world, while also not running into the knee-jerk reactions against crypto that, air quote, normal economists often do. The book doesn't mention ETH, and Bitcoin actually not that much either. It's mostly cleaning up with misconceptions about fiat money that are very rampart in crypto circles. This is not a summary, just a bunch of things which he wrote that I found to be insightful. I'm going to make multiple parts out of it to keep the size in check. And this is part 1. Everything in squared brackets is not from the book, but my personal interpretation. This is a pretty long post. I don't know if I'm going to get through all of it because I saw that there's a Logri post down below. Let's go ahead and hit this big first one. Modern fiat money is a result of 2 major forces. The historically original function of money is to mark debt relationships between people, which quickly changed from individual debt contracts to standardized units, because this fungibility unlocks enormous economic efficiency. Bullet number 2. The standardization needs a consensus, which historically inevitably meant an authority like an aristocrat, such as the Duke from the book title. Later, a central bank, and these days now, a decentralization of this consensus is possible. And the final bullet point here, scarcity isn't a first-order property of money. It's only adopted because enforcement by legal means alone of legitimacy of money is an insanely hard problem. So the adoption of hard limits tends to emerge. Without scarcity, like gold backing, illegitimate printing of money would be easy for both third-party forgers and the money-emitting authority itself. Cough, feds. Okay, and central bank. Okay. Excuse me. Scarcity implies a cost that has to be carried by someone. If consequently you need gold coins for an entire economy to run on, the work for producing, minting, buying gold coins has to be put in, which at this scale is obviously extremely expensive. Or in other words, it's a lot of work that could have been put into something directly productive instead. Well said. In brackets here, the OP writes, proof of stake is historically low in its production and running costs, although costs are not zero. So in conclusion of this, the difficult enforcement of the legitimacy of money pushes towards scarcity-based money. And number 2, the cost of scarcity pushes away from a scarcity-based system. Okay, which works until it doesn't, as seen in a bunch of hyperinflation scenarios in the modern era, and it goes on from there. If you want to check out that post, it's available at dailydoots.com /weekly/roundups. Yeah, I think I even commented on this post when they came in. Yeah, so that was my takeaway, was what they put in their quotes. They wrote, proof of stake is historically low in its production and running costs, although the costs are not zero. I replied to that, compared to the velocity of value it supports, it's basically zero, a rounding of an average consumer energy use at best. Your write-up is appreciated. Thanks for being here. So yeah, thanks for being here for sure. Gumba Hasselhoff, Deuter number 6 for the week. Anybody got any thoughts on that? Okay.
No, thanks for bringing in some Germans.
Yeah.
Book out Never Read to the Daily. That's very cool.
Yeah, it's very good. Yeah, definitely appreciate those perspectives from all over. User Tricky Troll, getting double dooted this week, delivers a critical privacy PSA for EU citizens. All right, not entirely on topic, but privacy and open source encrypted messaging services are under threat by the EU again. They're pushing very hard to get chat control legislation pushed through, despite the AI, which will scan all of your personal communications, only having 20% accuracy. Damn. So you could be under investigation by the local police for simply asking your local Linux nerd, quote, how to kill a child, the process, when the parent stops running, unquote. In the long run, they could put anything under the scope of illegal activity, including telling people about the ongoing genocide X and location Y, which your government is complicit in, the killing of innocent people. Oh, and obviously the politicians trying to implement this dystopian suppression of basic human right to communication would be exempt from having their messages scanned because people in power never, ever harm children. Well, you can definitely trust them on that one. Please, reach out to your elected officials now. If the EU falls, it's only a matter of time before the rest of Western world falls too. I know I won't be the only one getting one step closer to giving up on humanity and therefore not having kids if we continue down that dangerous path. We can't afford to lose the freedoms that Western governments post-World War II granted us, as we won't ever get them back at the speed which technology is progressing. We've beaten this bullshit legislation before, and we could do it again. Please do your part. Head to fightchatcontrol.eu. All right, and there's a Louis Rossmann video on the topic as well. Thank you, Tricky Troll. User the Moon Dance Kid. What a freaking great name. I love Redditors. They have the most unique usernames. The Moon Dance Kid identifies the next major group after treasury companies are done buying up ETH. Moon Dance Kid is at a Deuter number 9. Okay, for all of those, who is going to buy ETH once the treasury companies are done loading their bags, people? Okay, well, the vast majority of investors in Bank of America Global Fund Manager survey have zero crypto exposure. Zero. I'll say it again. The Bank of America Global Fund Manager survey has zero crypto exposure. Of that, a small percent who do have exposure, the average portfolio allocation, drumroll please, 3.2%, which honestly sounds about right, I would say, 5 years ago. But these days, times are a-changing. I bet those portfolios start to flip upward a bit. It's kind of funny how price attracts money.
There was an executive order, a week or two ago, which should help to change that trajectory. It's just where we would start to get pension 401ks that would be able to hold crypto or hold an ETF or hold, these DATs. But I think that this is, it's hard to get them to pay attention when it's only going to be like 1% of their portfolio, right? 1% of their portfolio. They're just like, okay, fine. I like have a fiduciary duty. It shows, as an ecosystem, it's not correlated with other things, and therefore I have to buy some. What am I going to buy? The largest thing they just throw in Bitcoin. They never learn anything, right? They never plan to use the chain. They don't research any of the asset value because it's 1% of their portfolio. They spend all the time in the 99% of their portfolio. I think we need to dream bigger than 3%, right? I think we need to get those valuations, on our blockchains up into the 5-10 trillion range, so that they're like, oh, I don't just want 3%, I want 15%. I need to learn about this stuff. Holy shit! Look how transformative this is, right? That's where we start to win not just a little bit of market share, hearts and minds and real penetration.
Leo?
I had a thought. It's on the tip of my tongue. It was about somebody in the comment. It said somebody about why would they buy after the Bitcoin treasuries are done. So my first thought on that is that, like, why do you buy a lot of the things that we value? Like, why do you buy them? And a lot of them come out of dependence. So, like, if you look at oil, the reason that we buy oil is because we depend on it for energy. And so if we have this asset called ETH and the entire global financial system depends on it for security and for fuel, well, of course people are going to buy it. I mean, if you can just imagine a world where literally it's fully adopted and you approach someone and say, hey, there's this asset that is used to secure and fuel the entire global economy. It's called ETH, and it pays you a 3% yield if staked. Do you want to own some of that? Right. I guarantee you people are going to say yes.
Yeah.
The only question is, how much do they want to buy?
How much?
I'm not aware of another commodity that's productive in the same way that ETH is.
Yeah, it's definitely unique. Yeah.
Right. It's weird in the same way, like, people really struggled to figure out light in physics for a long time. So, like, look, it's a wave. No, it's a particle. No, right. And eventually we're like, oh, it's a wave particle, right? Well, this is a commodity, but Panda. It's a productive asset. Well, it's kind of both, right? And it's more than that. So it goes back to some of the triple point asset meme. But my point is, I think that one of the reasons that this is a difficult asset to get a mind share and deep understanding on is it doesn't behave like any assets that really came before in the commodity space, right? And it doesn't really fit that well into a tech stock mold. It doesn't fit perfectly into a commodity mold. So you kind of have to, like, make a new mental framework for
That's it.
And that leads to a lot of, like, speculation variance where people are like, no, it should be worth $200. No, it should be worth $100,000. And somewhere in between, right? Like, just because it's not well understood. And it's going to, before we can get people to take the time to dive into it with rigor and really understand it, we need to hit some of those, some of the real reasons they care. Deep penetration into capital markets, a lot of people using for daily transfers, point of sale type things, big funds holding it as a productive commodity.
Remittance.
Right? Like, remittance, all the things related to, like, tokenized stocks, Forex reserves, right? Get a couple $1 trillion of Forex transfers going through Ethereum a day. And, then I think people will be motivated to take the time to really understand it better.
I remember several years ago when I was really getting into this, I was having the what is this moment? Like, in my brain, especially with Ethereum, it was like, what exactly is this? Because the feds are, and the accountants and, legal, the IRS, they're all trying to figure out what box to put it in. And it's like, you can't. It's too elastic and weird and different than anything that we've seen in terms of money ever. And especially once you could start programming this thing called money, and I was thinking to myself, like, they're going to have to come up with a whole new, like, department to deal with this, because this doesn't fit perfectly in these existing legacy, frameworks. So remains to be seen.
We've done a lot of reinventing TradFi constructs in DeFi, but this also enables entirely new, unconceived things, right? And we can glimpse some of them at the moment. What we were saying, the things you could do if you could tokenize intellectual property, or the things you can do now that atomic transactions are possible, the things that you can do once you can have, like, native rollups and you can sequence things atomically between L2s. There's things that you can do at a legal agreement with now anonymous people without needing to have a jurisdiction to pursue with a court.
There it is.
There's types of coordination which are now possible through this that were previously not possible. And that enables, unknown levels of prosperity and unknown levels of interesting new things that are going to build upon that, right? So we just have to kind of watch this carpet unroll in front of us and keep your eye on the ball and dream big.
Well
Yeah,
said.
that really raises an interesting point. If you go back to the early internet days, I don't know exactly what these videos are called, but I've seen videos on YouTube where somebody's talking about the internet, and they'll laugh because, and what they're laughing about is, oh, you think that thing's going to replace the phone book, the yellow pages? And you look at what it's evolved into today.
Yeah.
So we really truly have touched just the tip of the iceberg as to what this thing could grow into.
There's
What
it's
we
a famous
do understand is already, several, like what we already understand is apparently a $7 to $10 trillion market cap. That's what's known. What's not
Right.
known is everything. It's the equivalent of Web 2 to Web 1, right? That's
Yeah.
what's not known right now. So we've got Web 3. Somewhere out there is a Web 4 we don't even really understand yet. That's going to be as
Yeah.
differentiated. And I look forward to being here for it.
Absolutely.
Yeah, it's there. There's a clip. I won't show it or anything. Go to YouTube, look up David Letterman, Bill Gates, baseball. And essentially, in that early conversation about the beginning of the internet, Bill Gates had kind of quipped, you'll be able to listen to the game on this thing called the internet. And David Letterman was like, "Have you ever heard of a radio?" And it just totally missing the point, because you could on the internet listen to a Yankees ball game anywhere in the world. So, all right, yeah. To finish up this one here. By the Moon Dance Kid. Trillions of dollars. This is according to Nate Geraci. This is according to the OP on Reddit. Trillions of dollars just sitting there waiting to buy your ETH at much higher prices, and you're selling it at 4,500 because a little dip and it might be over. Or because you made a spreadsheet last year and randomly picked $4,500 as a nice place to sell some. Come on, gents and lady, hang in there. I will say this, if you have goals, stick to your goals. That's fair. Okay, user trillions dollar stretch, making it on the weekly again. Tom Lee, Ethereum is poised to leverage the White House Genius Act and SEC's Project Crypto the same way Wall Street boomed after 1971 when the USD came off the gold standard. Quote, the Genius Act and SEC's Project Crypto are as transformational to financial services in 2025 as U.S. action on August 15, 1971, ending Bretton Woods, and the USD on the gold standard 54 years ago. This 1971 event was the catalyst for the modernization of Wall Street, creating the iconic Wall Street Titans and financial and payment rails of society, rails of today. These proved to be better investments than gold. This is according to Crypto Gucci status. It's Crypto Gucci on X. Now, I'm going to toot my own horn here for a second, because I said the same thing, I believe, on the last podcast, because there was an SEC reflections and note that was published, and I published it in the last episode, but there was very much this idea in the writings of the USC. This was like their stream of consciousness of what the kind of their thought processes are, and it definitely rung true to me then. It was the same type of thing when they took us off the gold standard. Not to say that doing that was positive. I mean, I guess in some ways it was, some ways it wasn't. I'm not going to get into the argument of the gold standard. I will say, in terms of transformation of the entire economy, it's that impactful. And you're seeing so much alignment in Washington to this. Okay. Oh, boy. I see what's coming. I'm going to have to...
It's not that bad.
I'm going to take a drink here. I'm going to be chugging, because Logri the Bard is coming up next.
This wasn't a big wall of text, JT.
Okay, well, I'm still
You're
getting a
lucky.
drink. I'm in my head, man.
The Ethereum machine would just keep chugging.
I'll be right back, guys.
All right, Leo.
Chugging. Just keep chugging. Just keep chugging.
Plus, I just got to play this song.
Just keep chugging. Just keep chugging. Keep chugging.
Nice. All right. Let's get into it. Logri the Bar introduces us to a top-tier, thought-provoking, bankless episode on financial markets. Logri coming in hot, pushing bankless. I like it. It's been a bit. The Bankless episode with Michael Green is amongst the most thought-provoking episode I've seen there in years. It's full of interesting mechanical insights on financial markets. It talks about how low float tokens led to the dot-com stock bubble. It talks about price elasticity, like a recent post of mine did, and how that changes with market cap. And due to compulsive buyers like ETFs, it talks about the demographic/pension crisis and some seemingly inevitable market halting events coming at us. It talks about legislative distortions of decisions that have been made without being blanket anti-regulation. It talks about hard currencies in ways that will be quite unfamiliar to those who subscribe to a 21 million hard cap, and specifically paints Bitcoin as being anti-human innovation while being pro-tokenization. He has a rather academic view at times, but it was an interesting watch. If Logri the Bard is telling you should check out Bankless, you should check out Bankless. Logri the Bard rounds out number 2 spot on our leaderboard at 231 Doots. So cool. And I don't see a bunch of crap in the comments crapping on Bankless either. So that's nice to see.
Not this one.
Not this one. I mean, there's been plenty of reasons in the past. I get it. But overall, that's cool that they struck a chord with you. That's good. That's good to see. Let's do a quick check on Leo Lanza's Twitter following. He's gained another one. He's at 89.73. Let's go take a look at the price, do a little refresh. We're at 48.16. I think Bankless is actually streaming right now, a little watch party. I think they did that last time, and it got slapped down pretty good. All right, user Tokidoki unleashed a storm on their keyboard and explained a few different Ethereum ecosystem apps. Let's see what Tokidoki's got to say. Ooh, it looks like they cite something from Logri the Bard. Tokidoki rounding out this week's Doots. A Dooter number 1. This is 2 first-time Dooters making it on the weekly podcast. That's always great to see. Tokidoki writes, I'm gonna yap here a bit before I get to the useful stuff. And forgive any weird formatting errors as I'm typing this out on my phone and from memory and on practically no sleep. Yeah, that's the best time to do Reddit. So feel free to skip the first paragraph, LOL. So it's been a couple of years since I last logged in. Basically since RIF died. What is RIF? I've been holding through the peaks and valleys and lurking most days, though. I'm glad the daily is more vibrant than eThFinance was after the API changes killed off a lot of the old guard. God rest their soul. Plus the shedding from the bear, God rest their souls, and hacks their souls and life in general. R.I.P. to J.P. Macklemore. Oh my God. Yeah, that's crazy deep reference. I hope you tame those demons, my dude. Yeah, JBM. He didn't die. His account online did. But I'm a bit disappointed by how little signal there is in the sub now. I learned about reputable DeFi protocols like Pendle and Morpho from the dailies, and through the years have managed to grow my stack significantly. Specifically, would like to call out Logri the Bard, hopefully this tag so he can see, since Pendle during the points meta made me a killing. But anyway, here's a few protocols and resources I'd recommend for any DeFi newbies, and hopefully it will help you build conviction in this glorious asset we call ETH, just as it strengthened mine throughout the years. I'll avoid direct links since I'm not sure what's allowed, good choice, or not. But as long as you've got an ad blocker, you do use an ad blocker, right, and on, Googling and using the general knowledge resources should get you the right place. Okay. Remember to bookmark the protocols you use regularly as well as to avoid misclicks. Also, my personal suggestion is don't pirate it. Don't go to lots of porn sites. Don't on the same computer your hot wallet is on. Good call. All right, general knowledge. Good for general knowledge. DeFi Llama gives you a basic overview of protocols, the total value locked, and links to their websites and socials. I'm sure Leo agrees with that. You can filter the protocols by chain as well if you know only You only want to know something on mainnet base, Arbitrum, etc. You won't waste any time. I take TVL as a general measure of trustworthiness. And personally, anything below 100 million TVL, I won't even touch. Another site, Exponential Phi. For the true newbie, I'd probably start here. The free education, the learn and explore tabs that they have is really good if you have no idea what you're doing, explaining how DeFi yield works, giving their own assessments of risks, and protocol credibility, all the things I found quite helpful starting out. Their primary goal is to get you to sign up for their service, where they will manage your on-chain funds, but I can't speak about the quality of the service, as I've never utilized it. I think it's legit, though. Maybe another member here that's used them can chime in. All right, let's talk about swaps. CowSwap, hell yeah, I love CowSwap. Stands for coincidence of once. I didn't know that. Charges no fees and generally ekes out a little extra return compared to others. And most importantly, it moves at you when you find a match. I love it. Much love and highly recommended. In my opinion, no reason to use any other service for swaps. Yeah, +1 for that. Leo, I don't know if you have any other recommendations for swaps, but I love CowSwap.
Yeah, I've used CowSwap before.
Cool. All right, lending. Here comes the big ones. Aave. It's the big kahuna. You all know it. Battle tried and tested. Gone through multiple bears unscathed.
I love it when a plan comes together.
You want DeFi at its safest? This is the place. All right. Check out the umbrella or staking insurance for Aave for what I'd consider the best risk to reward rate as possible. Moving on down to Morpho, a competitor to Aave that initially differentiated themselves by offering slightly better rates by matching users. I think they either they or Gearbox were the first to utilize vaults, but I'd say vaults are the primary draw these days. You put assets to a vault and the curator splits it among protocols to generate yield. Higher risk than Aave, but not particularly dangerous. If I recall, most vaults are around up to a 2% chance yearly to lose up to roughly 10% of the assets. Read the risk reports under the vault for the methodology and explanation, but stick with the whitelisted vaults and you should be chill. And finally, Pendle. A big breakthrough here was in offering fixed rates and splitting yield. During Points Mania, principal token ETH derivatives just printed money. I think I was getting roughly 40% APY at one point. Those days are past us, but being able to lock in a fixed rate is still worthwhile. Just be mindful that it's locked, and trying to redeem early can cause significant loss. An example is when the redemption rate suddenly changed for USD 0++, and people that were holding PT got hammered. Now to a protocol I've been researching, and I hope some other experienced members can chime in on. SummerFi, hey, we had them on the podcast, launched their Lazy Summer protocol, which is an aggregator built on top of Morpho, Euler, and Gearbox vaults that automatically redistributes according to rates. The onboarding process appeared suspiciously easy, plus a mix of AI buzzwords and dedicated support agents gave me a great deal of pause initially, but further research has convinced me it's not a scam or a honeypot. Note, this is still significantly higher risk than, say, Morpho alone, as Summer is built on top of other protocols and vaults, so you're taking on protocol, vault, and asset risk. Yield is highly attractive, despite the 1% management fee, as they will be launching their token soon. I recommend dropping the market cap assumption for Summer down to, at most, 100 million from their assumption of 250 million. Morpho is about 8 times larger at 4 billion TVL. Protocol and token is only at a 700 million market cap. The automated reallocating is nice if you're frequently swapping in and out of vaults chasing yield similar to beefy finance for LPs. Logri. If you've already deposited into the protocol, DM me your referral code, or if the mods allow posts so others can use it too, as I'm happy to give you a little extra yield, hey, as a thank you for all the opportunities that you shared over the years. Anyways, if you've made it this far, thanks for reading, and feel free to tell me how I got this all wrong. LOL. Going back to lurking now. Stay strong, ETH fam, and remember, you do not kill the golden goose. And that is a double doot for this week, a double weekly doot from Tokidoki to round out this week's podcast. Not only a double doot, but also a first-time duder getting 2 shouts on the weekly. That's pretty commendable. I don't know the last time that's happened, if ever. Well, any closing remarks, Leo, Logri, or anybody else?
Yeah, we should probably get a bunch of referral codes for the EV Maverick community for anyone like him who would like to kind of juice the community treasury, because we use that for education initiatives. That's just a way to help the whole ecosystem grow. And if you don't have a referral code, just kind of leaving the money on the table. So we should probably go through our DeFi protocols and have a page for that on our, our Daily Doots webpage. Second thing, Leo, I've sent you a Discord friend invite. Accept?
I already accepted it.
Cool. I'll follow up with you. Have fun.
Awesome. Well, that's great. Leo, anything else?
No, I think that's about it. I appreciate you having me on the show and everything that you do.
Well, appreciate you and everything that you do. Don't be a stranger. I'd like to get you back on sometime in the future. Hopefully this is the last time.
You can come and hang out for other guests too.
Anytime, man. It's every Friday, generally.
Good.
Yeah, every Friday, 2 Eastern. So generally speaking, sometimes we have to shuffle around and make arrangements around people's schedule, but it's a real pleasure to have you on. You could give him a follow at L3O Lanza, or just type in Leo Lanza. Can't miss that face. He's on there every single day on X, and hopefully we can get him a Reddit account and he can join us in the daily general discussion. All right, well, that's it. Thanks for subbing and smashing the bells around here. Stick around after the live stream if you want to, because we continue the party in the hotel lobby on Discord for a bonus hour of popcorn. It's a fun place to let loose when the parents aren't watching on YouTube. Hi, Mom. On behalf of ETH Finance and the EV Maverick Style, the daily general discussion on our Ethereum, my name is JT. Cheers and big hugs from Kansas City.